Yeah, I would say this structure or this structure here is the most recent structure on the monthly time frame that we broke to the upside, letting us know that we want to continue bullish. You can even use this one here just to be a little bit more safe. We broke above full body candle and then retested. Never broke beneath these lows right in here. And we never even came back to retest the previous break of structure either. So this area here was definitely good to place some buys or look for some accumulation right in there. All-time highs all the way up here. This is also liquidity where people would most likely start to sell off or try to sell off as well, right up here at these all-time highs, 45.97. So sellers, best place to sell is up there. Buyers, best place to buy would have been here off of 41.424 or deeper. But then as we go down to smaller time frames, we're able to see that there's more structure. Let's go to the daily. We saw that we broke some structure to the upside right here. This was the very first high that we broke above, full body candle, as you see. And then we retested with barely any drawdown twice. And now price is up over 700, 800 points just from that break and retest of the structure. On the daily, keep in mind we're still making those higher highs and higher lows, higher high here, higher low, higher high, higher low, higher high. This is another higher low. So are we going to continue that uptrend? So far, so good. It seems like it. We came right back. Again, this is that same monthly structure that we talked about. And once price got into that monthly structure, going on smaller time frames, you see that after we broke structure on the daily to the upside, buys are in. Buys are in. We're no longer making lower lows and lower highs. Right? This bearish cycle here was eliminated as soon as we did that, right? Lower low, lower high, lower low, lower high, lower low. We're supposed to make a lower high, but instead we made a higher high. We broke structure, so we broke this bearish cycle for now. And that was the indication for us to start looking for buys. And if you had missed this break of structure as an entry, you could have used the next one, which is this one, right? Either one of these would have been good. And then as you go down to, let's say, the 4-hour or smaller time frames, you're able to see more of the structure. You're able to see more entries you could have taken, but this would have been the best area. And I did call these out live on the calls. If you're plugged in, we called these right in here as well. This happened at 7 a.m. right during the call that I usually do. So multiple times to enter these markets with no drawdown. And then boom, 700 points. Easy money. Again, here's the accumulation broken down. Liquidity buildup, sweep, break above. Right, we broke structure here and we broke structure here. Retested, gave you some nice movement. Sold off after we swept some liquidity up here, tapped in some of these imbalances, back to the same entry, and bought up again. Super solid. Super nice. So if price were to come back, definitely looking at those areas. But if we zoom in and see what's happening currently with structure right in here, more specifically this, we see that we broke structure here first. Full body candle, retest twice, gone. After that, we broke more structure here or here. Whichever one you want to use, you can use the first one or even this one here, right? We broke above, full body candle, retested 3 times, and then continued to move even further, another 340 points. So as we approach more highs, more areas of liquidity where price could reverse, such as here, sellers may come in right in here and try to sell off back to these buy zones, back to these buy limits here, or if it goes deeper down there, or if you want the imbalance play, you can enter off the imbalance or order block. If you want the liquidity sweep, you can put a buy limit here at the wick, because after price sweeps liquidity, it can reverse. So that's always a good place to put a buy limit. The same reason why there's sell limits here, because once price sweeps liquidity, there's a chance of reversal. Lowest risk area possible. And then so on and so forth as we work our way up. This is the 1 hour time frame, so you're going to have a lot of these liquidity points. That's why we look at the higher time frames. So you don't have 50,000 lines as you see here, right? All these lines, you don't want to have all that. So it's better to target higher time frame zones. Let me just make this visible right there. But that's Dow Jones. So let's go to NAS real quick. Boom, NAS 100. Either one works. I like Owanda. Let's zoom out, go to the 1 month, starting with the highest time frame. Let's delete everything. Same thing on NAS. It's been on a crazy run to the upside ever since we broke structure here. On the 1 month chart, again, we broke structure, full body candle, retested, gone. Maybe you would have had some of these highs marked up too. Maybe you would have had this marked up. No retest there, but still solid. Maybe you had this structure marked up, this liquidity, right? We broke above, retested, so on and so forth. Just riding the wave up. And as we see now, price came back almost to this structure, right? Ever since we broke above here, we've been pretty much holding this down 3 times in a row, almost a 4th time of this structure playing out. Even this one down here, similar thing. And again, this is the monthly time frame, so it would behoove you to indicate monthly structure, right? If in order for a price to make a higher high, we have to break structure to the upside, and then vice versa for downside. So it would make sense to mark that structure up. It would make sense to mark that up. So when price comes back down there, you know that's an area of significance. That's how you get these wick entries right in there. And that's why we looked for buys in these areas. We also had these lows marked up as well for a potential sweep of liquidity and then reversal, which so far has been respected, even this one. 7 days left on this candle, and so far we're not showing signs that we want to close beneath any of these lows, which is just confirms more bullishness. It looks good for us. It builds that confidence for us as well. Let me just fix all this. Go to the weekly now. As we see closer, we get to see some of this price action a little bit closer. We get to see some of these structures more closely. Even if you marked up this weekly low here, again, you see that we swept it. And then we reversed. So it took us sweeping a couple of these lows before price actually decided to reverse. That's how many points? You know, that's 500 points. But and again, that's why you go down to smaller time frames, which we did. As price was sweeping these higher time frame weekly and monthly lows, we're looking at current price action, waiting for us to get a change of character to the upside. We're looking for price to show us that those levels want to be respected. And we got that on the daily right in here. It took some time, a lot of emotional damage and confusion a lot of people were facing, but that's why you just sit there and be patient. And once we got that on March 17th, we got that full body candle close. That means anything after that is up for grabs for buys. Starting from the structure that we just broke with this candle on the 17th, anything from that structure break all the way to the lows, all this is valid for buys. You can take it on the structure. You can wait for it to go lower. You can even wait for other sweeps of liquidity inside of this range here, which we got in right there. You can go to the smaller time frames, look for more setups, look for more breaks of structure, which we had here. This was a good one. We broke structure here to the upside. If that wasn't good enough, there was another one right here, which we very well used. And even this one right in there. These two were like solid structures that we took. I remember this trade specifically that we took last week and this one as well, right? We took both of these perfect opportunities all within this range after we got that daily breakup structure, all within this range here that it gave us multiple opportunities to take this play, and now prices up over 500 points. So there's really no reason why people shouldn't be making money unless you're just not plugging in, or people want to take their own trades, which is fine. You can take your own trades, but don't get upset or get confused if you're getting clapped, or if we're not sharing those trades or ideas. Like we should all be taking the same trades if we're studying the same market structure. But Habibi, I just saw your question. How do you deal with gaps? How do you deal with, like, what do you mean? Like a gap like this? It's just a gap. I don't.
Yes.
This is also imbalance. So a gap is the same thing as imbalance. But what do you mean by deal with?
So I guess I'll give you like a I would see, because every time I see a gap, I always like picture um like the price has to come back down to this. Sometimes it takes a while to get there, but I see it has to. And then and I try to put like a buy limit or sell limit, whichever the case is, on those things. But sometimes it doesn't even close the complete gap, and then it just totally ignores my limit and continues the way I wanted it to go. So like, how would you? I mean, I guess my question is like, when you see a gap, what's your game plan with that, or do you just ignore it? Or
So first things first, in the market, I never say things like it has to do this or it has to do that, because if I knew that it had to do something, then I would already be a multimillionaire. That means I have the magic ball and I know exactly what the market has to do, but we don't know that answer. So what I like to do is wait for the market to give me some type of confirmation that whatever gap or whatever structure or imbalance or order block, whatever area that catches your attention, if you don't see the confirmation, which is the same thing, liquidity, a sweep, a break above, and that retest, if you don't see this setup here, then 9 times out of 10, your confirmation or your setup that you have that marked up, it may get cooked because you're not getting any signs. So if you're looking for buying opportunities, you want to see signs of accumulation. If you're looking for sells, you want to see signs of distribution. But if we're not getting this confirmation at your gap, at your structure, at your imbalance, whatever, if we're not seeing this near your area, then I would be cautious. And so as far as this gap goes here, that's cool and it's great. But as of right now, the only setup that I see that I just marked up, the same thing that I just marked up here, this whole thing here, the only place I see that is down here. Right? We have the liquidity, the sweep, and we broke above right here. We got a nice little retest, and then we gapped up. That's how strong the accumulation was. That price gapped up during open. So that gap is great. It's great news for buyers. Shows us that we're in control, but the buy limits are down here. Right? Buy limits are going to be down here. If I'm looking at a place to enter the market, I would be looking to enter off of the structure that we just broke to the upside. Right in there. If it wants to go lower, then I would use the very first high that we broke above. Right? 3 opportunities to get in, but I'd be looking here for entries. I wouldn't be looking here because this is way too high. And you can possibly get cooked if I draw the Fibonacci from the low to the high. 50% is all the way down here near the entry. So that's cool. But if you want to be a little bit more precise with it, then I would wait for this accumulation right in there.
appreciate that.
Got you. Yeah, this is the accumulation distribution. That thing I would just study it until you literally see it as soon as you open the chart. As soon as you open the chart, within 3 seconds, you should be able to identify some type of accumulation or distribution, depending on what you're looking for, buys or sells. But we're still good. We're still in a good place. We're still in a good place for buys. If it ever comes back down, I wouldn't mind taking it here. And that 4-hour structure that I just marked up, it's still within it. Right, this is that same high that I just marked up on the 1 hour. Right, that same high. It just so happened to accumulate right beneath that daily structure. Right, this is that daily break of structure. It's very convenient how we got an accumulation schematic right here, right underneath that line. That's very interesting. That's just more proof of like how intricate this stuff is. And like once you see it, it becomes very obvious like what they're doing, which is good. It's good for us. So this is a perfect example of accumulation. Let's go to gold real quick. I know everyone's waiting for that one as well. Boom. Again on the monthly. Every week, every day, I recommend clearing your chart. Like every single day, you should be able to clear the chart, mark it up again, and you should get the same, if not similar or better markups. You should be 100% comfortable with that. And that's how you know it also helps you get in the reps of marking things up. So here's more structure that we broke. Full body candle right here, and then retested the next month, and then price flew. Just off a break and retest. And then you could have marked up some more structure here that we didn't quite retest, which is fine. You don't have to. And there's also more structure down here. So if price would have went deeper, having buy limits at each one of these points would have been in your favor for sure. And if it really wanted to go even deeper, then start marking up the lows, because again, price can easily sweep the low and reverse. So those are your two options for buys. Yes, we're high up. So in order for us to drop all the way like back down here, a lot of shit will have to happen. But so far, there's no sign of that at all. If you draw the Fibonacci from the low to the high, 50% is all the way here. So any buys you take in these areas on any chart, on any time frame, if you're taking buys in this area, you have to know in the back of your mind that if it gets cooked or if we lose, you can't be upset because you're not taking buys in a discounted zone. And I know, we're already so high up, and price doesn't have to come back down here. I've seen price not even give discounts and keep flying. But it's just something to keep in mind. All right, it's always like a little disclaimer. I'm like, by the way, we're not in the discount zone, but these buys can still play out. As you have seen, they're still playing out. And more structure here, as you see, right in there. I think this was on that one. Yeah. And just look how price reacts at these swing highs. Look how price, are we breaking above? Are we retesting? Every time you see how it just plays out super clean. And then just keep marking up more structure. Like this is more recent structure here. 29.54. That's a good place. Maybe you can use this one since this one is like the very first high, and then we had 3 more highs. So I would use this one first. More around 29.42. We tried to break above 1 time, 2 time. Finally broke above. So any more buy limits, your best bet would be here. Again, looking at this Fibonacci from these lows to the highs. 50% discount is right here at that same structure I just marked up. So super solid place. This is the weekly. Going back down to the daily. Just refining that. You see as we dive deeper, there's more structure here that we just broke above. On the daily, full body candle, we came back to retest and then reversed. We even came to sweep the low. Did we sweep the low? We didn't, but just look how accurate it is. You would have had a buy limit here at the lows for a possible sweep, and you would have had a buy limit at this structure for a retest. Either way, you'd still be up. Just off that alone. And then as you go down to smaller time frames, you would see or confirm that there's some type of accumulation happening. So we're looking here for some accumulation. Are we getting that? Let's take a look. Technically, we did break some structure to the upside. Right in there, we tried 3 or 4 times, finally broke above, retested once, twice. So this area is still valid from the structure that we just broke and below. Still valid. I wouldn't take these though. I wouldn't take those buys only because we are still pretty high up. I would rather catch some lower plays. As you see here, we have all this beautiful accumulation, sweep, break above. So a retest, I would not mind that. Wouldn't mind taking something like this to continue the move. Would not mind that at all. We don't know what's going to happen, so we're just going to wait for more evidence here, but just know we are at some highs. So taking any buys there, you can still make money off these buys, and it probably will continue from there. But just know if you don't win the trade, it's okay. Like that's a premium entry, but I'd rather wait. As we see here, we did break beneath some of the structure right in there. We broke beneath these lows and these lows here. We broke beneath all these lows. Huge imbalance right there. So we'll see what happens. We'll see what happens in there. I would rather wait a little bit more, either for us to break these highs to really confirm or come a little bit lower. Because if we do break these highs up here, if price were to break above, that'll be even better. But all this would be considered liquidity from the low to the high. Sweep of all this liquidity. Breaking above, waiting for that pullback would be a better option. Or if we don't break above and we go lower, I wouldn't mind taking, a lower entry. Because there's a lot of inefficiencies there. But we shall see. We shall see. That is essentially what we have going on indices and gold. Let me check on Bitcoin real quick. Let's see what's Bitcoin up to. Not really giving too much bullishness either. Yeah, we broke some structure to the upside right in here. We did break above these highs, but again, with Bitcoin, we are at highs as well. It looks just like gold. We broke beneath some of the structure. You can use any one of these lows, but this is one of the original ones from the far left. You can even use this one. Right, I just like this one here. Boom. Because of all this liquidity. Finally broke beneath it, sold off. Haven't broken back above, so people would probably sell off again right there. The next structure that would save us, would save all this, would be either here. Again, the lows that you could use is the first one right there. Boom. So people are selling off of these lows because we broke beneath full body candle. We came back to retest to continue the sells. Best place to buy would be off of the break and retest of structure, or maybe a sweep of liquidity at these lows. And if it really wants to get freaky, then all the way down here, which would be a retest essentially of the same structure right in there. Or if it doesn't want to go that low, it may just use this. All right, this is also liquidity, also a nice imbalance right here, still imbalance. So this can be used for price to reverse. But yeah, 73, in between 76 and 73, nice buys right in there. I would start scaling in, and then on smaller time frames, look for the setup. That's Bitcoin. And then what else do we have? That's really it. And then I can go back to GBP, JPY, or wait, what was it? GBP, what was it? I think it was JPY. Same thing with this one. This one could still sell off. So, a lot of people are selling at this structure right in there. So we'll see. I would rather see us break above these highs here before I really start looking for buys. But right now it's in a nice area where it could sell off. Unless it comes lower down here and respects this bullish structure, you can definitely keep riding this up. But again, we are at some highs here, but we already switched from a downtrend to an uptrend, like back over here, like back during this time. And then we just broke above these highs here. So this can be gearing up to start cooking and like blow past this. This may shift the entire structure. And if this shifts from, downtrend, right, low, the high, all this is a sweep of this liquidity to then break above. Even though it's multiple candles and it's not just one wick on a higher time frame, this is considered a sweep to some degree. And then boom, break above. That would shift the entire market right there. But that's gonna take time, months, years. Like, we don't know. Looking at the yearly time frame here. Yeah. Let's remove some of this. The structure right there, we broke above. Yeah. It's looking good. We broke last year full body candle above both of these highs. Above these highs here and these highs. With a full body candle. So coming back to retest made sense. And now we're pushing up. So yeah, this market could start shifting even more to the upside. This candle's looking real good. So yeah, this can be huge. And again, that first shift from a downtrend to an uptrend happened all the way back here at the very first high that we broke above, which is this one. Right, this is that very first high, that price, as you see, full body candle above the structure, letting us know we want to go bullish, retested, no drawdown, flew. Came all the way back down again. Retested multiple times. This is 1, 2, 3, 4, 5, 6 years of retest. 6 years of price retesting before it took off again. The lows, stop loss would have been the same low, right? The very lowest point. So all this would have been buys right there. All this would have been buy zone. 6 years to finally take off. That's patience right there. That's patience. 6 years of getting stopped out and going lower, sweeping more lows and more lows for then price to finally make the move. That's how long the markets are willing to wait. The markets were literally, most people don't even make it in trading for 6 years. They give up somewhere. They probably would have gave up, not knowing that, damn, this shit takes time. You gotta play the long game with this. But that's essentially everything, unless you guys have any markups or any charts you want to go over. I'm down the markup. Any chart.
Can you I don't know if you went through it already, but can you go to a USD JPY real quick?
Yeah. USD JPY, as we see, major downtrend. We're breaking beneath lows. We're marking up every low, right? We just broke beneath each one, right? Full body candle, retest, sold off. More retest, sold off even more. Retesting previous lows. This is the 12-month chart. Just like how cleanly price is respecting the structure, right? Super, super clean. Dropping off more beneath these lows here. Boom. So I would expect price to sell off again here. I would not be surprised at all. Not one bit. And then mark up right here, as we see. This was liquidity. At one point, we literally swept right above it. No drawdown. Sold off massively. Came back again. Did it again. Sold off again. But in that process, we did break structure to the upside right here. Or we did break structure to the upside last year. And now this can be considered, the current candle can be considered the retest of the structure. So you would mark your stop loss, or you would plan to keep adding buys unless this stop loss was violated. So all this from the structure break to the lows would be considered buys, and then you would just go down to the smaller time frames and look for more signs of bullishness if you are looking for buys. But keep in mind, this is a downtrend overall, so this would be a counter trend trade. Just keep that in mind as well. If you're looking for sells, I did already go over where the sells would take place, which would be either this first area here that I marked up or this next one, which I was trying to fix it though, right there. Yeah, people are selling here for sure, and they're selling here. So both of these levels right here and here, sellers are going to be stepping in. And as we dive deeper at this buy zone that we have, because it is starting to give some higher highs and higher lows, that's when you mark up more structure. Again, we broke structure here. This was if I'm looking at this area here, this is the first high that we broke above. Boom, retested, working its way up. So if I were buying this, I'd be buying inside the zone. That's a nice area to start. This is some clean accumulation here, because again, this whole time it's been downtrending, making lower lows and lower highs, lower lows, lower highs, lower lows, just over and over. And then it finally shifted in this area here to now start moving up. So we'll see what they want to do. So far, this looks good. If we do break structure here with the full body candle, I'd definitely be looking to continue adding buys. And of course, if it hits these higher zones and sells off, I'd be looking to catch the next buys, but I would still hold the sells since this is a downtrend right here. So you may hit the sell zone and then clap all the buys right here and just continue that move down, because technically, unless we break all the way back above here, this is going to be downtrending no matter what. Even if we got up here somewhere, right, it would still have to sell off. Like, you would still have to take the sells, because this is still would be considered a downtrend. But yeah, keep that in mind right there. So again, the best sells would be one of these liquidity points, either this liquidity up here that hasn't been tapped into, or the same structure that's been selling off. And if it blows past all this, then this would be the next area. And then look how huge these imbalances are and gaps. So yeah, this was nasty, especially back in the 70s. Or what year was this? 1980. Golly. Yeah, nasty work right there. And it's starting to accumulate right here. Some more highs you broke above. All right, this was another example. Full body candle, retest, 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 gone. Gone. Nasty. Fibonacci from the lows to the highs, 50% back down here. So these buys will be premium buys anyway, subject to clappage. If you look at the sells from these highs to the lows, discount sells won't be until back up here, preferably in this area. And then, these will be premium sells here. So that's essentially it. That's the structure we have right in there. But watch out for buys. This is looking pretty good. There's no signs of bearishness right here. There's no breaks of structure to the downside right here with current price action. So this could continue higher. So be on the lookout for that. But yeah, that's essentially what I got going on. What else do you guys want to look at? Are you guys good?
Good for now, man.
Good for now. Bet. I'll see you guys tomorrow in the morning. And I did drop the buy setups in the chat if you guys saw them. That's what I'm looking at currently. Buy limits already set. But let's get it. See y'all tomorrow.